Good morning, all. Hope you are able to hear me. Hope my voice is reachable.
Yes, sir.
Thanks for the confirmation. So any questions before we proceed to next topic? Yesterday we saw, all right, field attributes, right? Any questions in field attributes regarding text to field? Like, what do you mean by date field? Yeah, any questions before we proceed to the next topic? Yesterday we have started the enterprise structure part. So as I mentioned, we are going to take one particular project on a different company. So any questions before we proceed? Yes, no?
No questions.
Yeah, great. So we will continue. So here, just write down. So we are going to take a company name called a project on this particular 5 to 6 months or 7 months. We are going to take a company called Birla. So every name, every time I'll take one or the other company. So here I'm going to take a company called Birla because Birla is involved in several businesses, right? For example, they have a cement business and steel business majorly. So we are going to do a project on cement and steel business of Birla. Clear? So I think you have written this particular structure, right? FICO enterprise structure, client, operating concern, controlling area, company code 1, 2, 3, company, what do you mean by company? Credit control area, right? Business area, profit center standard hierarchy. Okay, so we will discuss each and every point now. Okay, after that, we will see the Birla example. I have done the configure, means I have prepared the structure of Birla also today morning. So this is our Birla operating concern. So this is the structure we are going to follow the entire course, this particular project. Okay, first one, write down in this structure. The first one, it starts with client. Write down client. Already we discussed what do you mean by client, but still write down client. Client is, so why I'm insisting, I can share this document to you, but at least we can have a discussion while writing. But that this should be there in your notes also. That's the reason I'm just asking you to write it down, this particular structure. Because across the globe, whatever project you will go, you will have this particular enterprise structure or organization structure, whatever may be the ERP. So normally in SAP, we will have a client, but in other ERP, we don't have a client, but the rest operating concern onwards, the complete structure would be the same. Okay, write down. Client is a separate database set in SAP. Separate database set in SAP. Based on the client, based on the client, based on the client, based on the client, the data will be stored and it will be retrieved. And it will be retrieved. And it will be retrieved. Means the complete data, user access data, master data, transactional data will be stored under client, right? We can store it and we can retrieve the data according to the required order. We can utilize any client number. We can utilize any client number from 000 to 999. 000 to 999. full stop. Except 000 client, 001 client, 000 client, 001 client, and 066 client. Zero double six, sorry, 066 client and 800 client. Okay, apart from this, we can use any number of number for client. So next one, example. For example, client 100 for development server. So this is example, not standard one. Client 100 for development server. Client 200 for quality. Client 200 for quality. Client 300 for production. So I'm just taking example. In real time, that could be anything, right? In one particular server, you will have not only one client, you may have number of clients. Okay. So next one, most important thing, operating concern. Operating concern. Operating concern. It is an highest organizational unit. It is an highest organizational unit for both FI and CO modules. FI and CO modules. Based on this, see, again, here I'm mentioning FI and CO modules, but same time, it is also a mandatory thing for other modules also, like your MM module, SD module. But whenever we are implementing, so end-to-end implementation we will do. FI module we will implement, CO module we will implement, MM module we will implement. So in MM, if we want to implement MM module in the sense, first we will implement FI and CO module. So the organization structure will be defined in FI module itself. Clear? So if we are we don't implement only MM module. Compulsory, we will implement, if I want to implement FI, CO and MM, then first the organization structure will be defined in FI and CO module itself, not in MM module. The integration will be done after implementation of FI and CO module. Then we will do integration with MM module and other modules of SAP. So the organization structure, that is the reason we have a number of opportunities for FICO modules, finance modules, because the basic configurations will be performed in FICO module. Okay, so it is an highest organizational unit for both FI and CO modules. Based on this, we can generate all the profitability reports, for a selected characteristics, and specified value fields. Specified value fields. Specified value fields. Okay. What is FI and CO? Whatever module we are doing, what is FI and CO module? What is the difference? FI module and CO module. What is the difference between a financial accounting and a cost and management accounting? What is the difference? Any idea? Any idea what is FI and what is CO? We are calling it as an FICO. I can understand finance and controlling. Controlling is nothing but your combination of your cost accounting and management accounting. FI is nothing but a financial accounting. So what is the difference between these two modules? So I'll tell you what is FI in the sense, for example, we will start our FI module or accounting cycle, whatever you call it. We'll start from bookkeeping, nothing but I can say it as a journal, and everybody knows, but I'm reiterating. Ledgers, trial balance, and final accounts. Okay. What is FI module in the sense? What FI we will do in the sense? Whatever reports we are going to generate, whatever reports we are going to generate in FI or financial accounting. Okay, whatever reports we are going to generate in FI, that will be useful for internal, means internal in the sense the company dependent people, internal and external sources. External sources. So whatever reports, see, whatever trial balance will generate, whatever final accounts report, trading profit and loss account, balance sheets, right? Whatever reports we are going to generate, all those reports are useful for internal purpose, for internal analysis, and same time for external sources. External sources is nothing but your creditors, clear? Your banks, right? Legal authorities. Why they require? For example, if we are applying any sort of loan on company, then we need to produce our reports, year reports or 3 years reports, like how we are performing in our, what is our P&L account statement shows, what is our balance sheet, financial statements, clear? So for that particular purpose, we prepare whatever reports we generate, that is nothing but financial accounting reports, and that useful for not only internal, for external source also we need to prepare, right? When it comes to CO module, whatever cost analysis we prepare, cost sheets we prepare, budgeting we prepare, clear? Materials sheet we prepare, right? Ratio analysis we prepare, cash flows, funds flows we prepare. So all those statements, that is use whatever reports we generate in CO, that is nothing but here when I'm talking about controlling in the sense, in your academic, just consider it as an cost and management accounting, cost and CMA, cost and management accounting, clear? Whatever reports we generate in CO or cost and management accounting in CO module, that is exclusively for internal analysis purpose. Clear? So what this is for decision, internal analysis purpose for decision making. Clear? Whatever different types of reports, as I mentioned, right? Your material reports or your cost sheets, budgets, right? Job sheets, whatever reports you are going to prepare in CO module, whatever reports you are going to generate in reports in CO module, that is for exclusively internal purpose, and we are not going to showcase this one for external people, because these reports we use for internal decision making purpose, demand forecast, supply forecast, and everything will come under this only. Clear? Any questions? I know majority knows about it, still I would like to reiterate. So here, operating concern, it is an highest organizational unit for both FI and CO modules. Based on this, we can generate all profitability reports for selected characters. I have highlighted selected characteristics and specified value fields. I have highlighted these two. Why? In the sense, write down. Selected characteristics means if we want to see if we want to see profitability according to, within the bracket, you can write it on as it is, according to customer-wise profitability, product-wise profitability, region-wise profitability, division, nothing but branch-wise profitability. Okay, if I want to see, generate a report on customer-wise. Okay, next one, product-wise. That is nothing but your segment, region-wise or division-wise, branch-wise. This is called selected characteristics. Next one, specified value fields means specified value fields means sales revenues, as per customer wise, product wise, division wise, etc. So what is the difference between these two? Selected characteristics and specified value fields. What is the difference? See, here also we said that profitability product wise, region wise, customer wise, division wise. But here also we are calling it as in sales revenues as per customer wise, product wise, division wise, etc. What is the difference? See, selected characteristics in the sense, it could profitability in the sense, it is a combination of your revenue, right? Sorry, it's a combination, it's a complete profit only. What do you mean by a revenue? What do you mean by a revenue? In general, revenue means whatever we are regularly earning, right? So that is inclusive of, for example, I am manufacturing a product, okay, at rupees 50. At rupees 50. And we have, and 10 pence, we are producing 10 quantity. We are producing in 10 quantity. Okay. So 500 is my cost, right? And what we did is, we are selling each product at 60 rupees. So your 50 rupees is cost plus 10 rupees is your profit. 10 rupees is your profit and price is 60. So what is price? Price is nothing but a combination of your cost plus profit equals to price, right? So here I am selling these 10 products to a customers called A, B, C, okay, D, sorry, C, D, and E every month. So A, B, C, D, we are selling it. So here, for example, 1 month I have sold it for 60 rupees. 60 in the sense two products I'm selling to each person. So 1 month I have, due to some reason, these 5 persons are not able to buy the products. At that particular point of time, I have sold each product at 40 rupees with loss of 10 rupees. Cost, okay, leave it, actual cost. We are selling this particular 40 rupees, 10 pence, 10 products. I'm selling at 40 rupees. Clear? So this is a loss. So here what we are going to do, 10 in the sense, 10 products equal to 400 here. And here in this month, we have sold all the 50 products at 60 rupees each. Okay, in 1 month, we have sold all the 60 products at 1 month, in 1 month. So we have generated 600. So here, this is called revenue. See here, 600 is my revenue. 400 is also revenue. Clear? So here we are not revenue in the sense, it could be whatever amount we are generating. we are generating by sale of goods. So that may increase, that may include your either profit or loss. But whatever you are receiving is nothing but your revenue. Clear? Here 600 we have generated in the month of March, and we have generated in the month of April by selling the same quantity at 400. Due to some XYZ reason, we don't want to hold the stock. Whatever may be the price, we want to release it. So that's the reason we got 10 rupees per product per quantity. We are in loss. But here this is called revenue, right? And what is here I have mentioned, that's the reason. Selected characteristics means if we want to see the profitability according to customer wise, means only the profit, in the sense, what is the profit in this? First one, we have a 10 rupees profit. We have a 10 rupees profit from each customer. How much profit we have generated, means which is not a loss, only the profit we want to check from each customer, each product, each region, clear, each branch. That is nothing but each division. So then that is considered as selected characteristics, right? And specified value fields. What do you mean by specified value fields? Only we won't see the profitability, we will see the revenues. Revenue means it may include the profit or it may include the loss. Revenue includes. So, sorry, specified value field means sales revenue as per customer wise, right? As per product wise, as per division wise. Understood? Any questions on this?
Hi Naveen, is that okay? Shall I add some points on this?
Yes, please. Yes, please.
See, basically the purpose of this report, what Naveen is mentioning is we need to analyze as per the company norms. Example, as he said, we have A customer, we have B customer, we have C customer. So the pricing of these customers also depends on the volume of sales what we are making to that customer also. Example, if for A, if I am selling a goods of worth of 1 million, and for B, I am selling a goods of worth of 0.5 million, the revenue generation will also depends on the profit margin. Example, if I am selling more goods, I might compromise on the cost because of the cash generation which I get from there. Similar way, for the other B customer for 0.5 million, I might give him at the higher price than what I quote for A price, because the volume of sale to him is little less. So it depends on the customer to customer level, and the agreement and the payment terms also depends. And this is where we will also look factor is my cash flow. How is my cash flow is happening when the goods are sold to different customer at different level. This will help me in generating the revenue for future endorsements.
Yeah, Danish.
Yeah.
Is it clear, everyone? Yes, no?
Yes, sir.
So this is about your operating content that we are going to see in depth, as what Danish has mentioned. We are going to see in depth, like when we prepare our cash flows, funds flows, like with when we integrated with SD model. So we are going to see in depth of this specified value fields and selected characteristics fields. Clear? So next one, write a note here. Operating concern is a mandatory component to implement profitability module in CO. Okay, so this operating concern we are going to configure when we move to CO module, not in FI module. Okay, after configuration of operating concern, we are going to integrate FI with CO through this operating concern. So initially we won't create operating concern. Operating concern we will create in CO module, right, to generate those reports, and we are going to integrate this operating concern with FI module. Clear? or whatever, what we call CO with CO module. Next one, controlling area. Controlling area. This is also very important. It is the highest. See here, you can see here, I can explain what is the unit and element here. Here I'm talking as an, it is a highest organizational unit. And you can see here, it is a highest organizational element in CO module. CO module. Based on this, we can generate cost and management reports for internal analysis and for decision making, whatever we discussed just now. Again, this is also CO module, controlling area also. But before that, write down a note. From ECC 6 version onwards, controlling area is a mandatory component for FI module. To implement new GL profit center accounting. This is very important. So new GL profit center accounting. So this version we are going to do. In interview also, you will get most of the questions on new GL profitability accounting only.
Hi, Naveen, just want to check with new jail profitability means we are as per the what do you call chart of accounts?
It's not exactly chart of accounts. Yesterday I said, right? The thing is in classic GL version, as I said, the new GL profit
Oh,
center
okay, got it.
GL debit equal to GL credit. The only single dimensional report we used to get. But majority organizations, majority companies want multi-dimensional reporting. So for that, they want to generate a reports GL wise, business area wise, profit center wise, segment wise, with multiple currencies.
Understand.
After movement, earlier this particular profit center accounting was with CO module. Okay, after moving from CO module to FI module, then it is capable to generate multi-dimensional reporting in FI module. And the scope was increased drastically in SAP FICO. Okay. Any questions before I proceed? Yes, no?
Yeah, got it.
Yeah.
Thank you.
Next one. Earlier versions, profit center accounting, profit center accounting. So within the bracket, you can write it as in classic PCA. Classic PCA was in CO module. You can put a full stop here. CO module. In new version, it is moved to FI module. Move to FI module. And now we are calling it as new GL profit center accounting. New GL profit center accounting. So in the resume, we are going to stress more on this. In our resumes, we are going to stress more on this new GL profit center accounting. Clear? So that makes a difference. As I said that still in Hyderabad and Bangalore, whatever training institutes are there, I'm not taking any specific name, but still they are dealing with classic GL version, profit center accounting only. Means the profit center accounting part, they're going to handle in controlling module, not in FI module, because it kills the time. It takes a lot of time to give the deliverables. But without that, we don't know how the multiple dimensional reports we can generate in FI module. So that's the reason what we are doing. We are going to stress a lot in our resume regarding this new GL PCA, new GL profit center accounting. So that's make a difference between our resume with others' resume. Right? Most of the what I saw in our consulting this thing also, majority consultant still they're having hands-on experience, but even they have a lot of confusion while implementing the new GL concept. But here in the practice here, we are going to do step by step clearly how we need to do the configuration and how we need to understand the profit center complete hierarchy end to end. Okay. So next one, right? Controlling area or controlling areas. Controlling areas can be maintained in two methods. In two methods. In two methods. First one. In two methods. First one, controlling area equal to company codes. So this is again important. Controlling area equal to company codes. 1:n methodology. Here we call it as an 1:n methodology. Next one, controlling area equal to company code. 1:1 methodology. 1:1 methodology. We'll discuss what is 1:n and 1:1. So write down first one. Controlling area equal to company codes. I said company codes. Within the bracket 1:n. If remember this particular point, if we are creating controlling area with 1:n methodology, 1:n methodology, 1:n methodology, all member company codes, all member company codes must use same operational chart of accounts, same fiscal year variant, but currencies may differ. So once just check again, I'll repeat. If you are creating controlling area 1:n methodology, means when we can have 1:n methodology, in the sense nothing but one controlling area can be used for all the member company codes, number of company codes. For example, here I am having, as I said, that I'm taking Birla is my company. Okay, Birla is my company. This is my company. Birla is my company. This is our group of companies. So we are having Birla Cement is one business. This is in India. Okay, Birla Cement is in India. And next one, Birla Steels. Birla Steels, same in India. These are company codes. This is my company, and these are my company codes. And we have one more, Birla Steels in US. Fine. I'm having one company, and how many company codes we have? Birla Cement is one company which is in India. Birla Steels is one company code in India. Birla Steels in US, one company code in India. So here I want to create one controlling area. For example, I have created controlling area called Birla controlling area. Means profit center standard hierarchy we are going to create. So here I want to utilize Birla controlling area for all the three company codes. I want to utilize, I will create one controlling area, and I want to utilize the controlling area for all the three company codes. So when we can use one controlling area for all the company codes, in the sense, in future, we are going to create chart of accounts. Chart of accounts. I'll tell you, that is nothing but your list of ledger accounts, chart of accounts, right? So I have created chart of accounts as BCOA or BOCA, Birla Operational Chart of Accounts. So I have created BOCA. So the same BOCA, Birla Chart of Accounts, I am using for Indian company, cement company. Same BOCA I am using for Indian company code, and as well as same BOCA I am using for steels, which is in US. So here the operating, when we can use the controlling area, common controlling area for all the three member company codes, in the sense, first of all, the chart of accounts must be the same. They have to utilize the same chart of accounts. Next one, fiscal year variant or fiscal year. So what is fiscal year? So here, this company code, this my company, the major company is in India. Birla is in India, but company codes are, two company codes are in India and one company code in US. Though fiscal year, they need to follow, for example, April to March, April to March, April to March, right? This company code need to follow April to March only. So here, when we can have a 1:n methodology, in the sense, the chart of accounts, all the member company codes need to be used the same chart of accounts and the same fiscal year, then they need to use. Then only we can have 1:n methodology, one controlling area, n in the sense, n number of company codes. When we can define one controlling area and number of company codes, in the sense, when they are the member company codes are using the same chart of accounts and the same fiscal year, April to March, and the currencies may different. One more, so currencies may not be the same. Here we use INR, here we use INR, and here we use USD. Here 1:n methodology. Suppose if I am using here Jan to December. So what is the prerequisite or condition here? I can use one controlling area when we are using all the member company codes, one chart of accounts, one fiscal year. Okay, so here same chart of accounts we are using it, and fiscal year also we are using it. So these two company codes we can use same chart of account, same controlling area. But here, is it possible? The third company code? Yes, no?
No,
No, right? Why? What is the reason? The
because
chart
the
of account
physical,
is same,
yeah, but physical year is different.
different. If we are using the same fiscal year, same chart of account, then only we can use one controlling area for all the member company codes. That is the thumb rule. Next one, write down. This is controlling area, 1:n methodology. Next one, controlling area equal to company code, 1:1 methodology. 1:1 methodology. If we are creating controlling area with 1:1 methodology, 1:1 methodology, all company code attributes, all company code attributes like all company codes attributes like chart of accounts, fiscal year variant, and currencies will be copied to controlling area. Full stop. When all member company codes are using different chart of accounts, different fiscal years. Clear? So 1:1 methodology, when it possible in the sense, when we are using, we have 3 company codes. One company code is using different chart of accounts. Second company code is using different chart of accounts. Third company code is using different chart of accounts. And same time, first company is using different fiscal year. Second company code is using different fiscal year. And third company code is using different fiscal year. So definitely we need to follow 1:1 methodology. Means your client doesn't know what do you mean by 1:n methodology, 1:1 methodology. What he will say at the time of giving your documentation, they will mention that I am having 3 company codes. One company code I am using April to March. One company code I am using Jan to December. One company code I am using July to June. Right? So immediately we need to configure 1:1 methodology controlling area, not 1:n methodology. Or he has mentioned that I'm using for company code same chart of account, 2 same chart of account, 3 same chart of account, and fiscal years are also same. Then we need to follow 1:n methodology. 1:n methodology. Clear? Any questions? Any questions here? The difference between 1:n methodology and 1:1 methodology.
So Naveen, I have a question here.
Yes, please.
So as you said, in 1:n methodology, we have a different currency for
Correct.
one company.
We can have.
Yeah. So what if again, if there is no difference in the currency in all the
No
3
problem. We
company
can use
codes?
1:1 methodology. See, that is an exception. That chart of account should be the same, fiscal year should be the same, but currencies may differ.
Okay.
Clear? If currencies are also same, not an issue. All 3 company codes are in India, then definitely we use INR, and INR. Correct? So that will not be a challenge.
Okay.
Yeah. Next one. Any other questions from anyone? Because I know this is a little, because initial phase, we will feel some sort of issue with this, but once we'll start the configuration, then definitely we will not have any sort of issues. But try to understand the logic. Any questions? Okay. So write a note here. This is cross-company code costing. Cross-company code costing or overall or intercompany transactions. Intercompany transactions are possible or ARER possible only in 1:n methodology. Only in 1:n methodology. Clear? This is very important step. Means majority of people know that. If I am following 1:n methodology, but even though I have 5 different member company codes, but I'm using 1:1 methodology, then the intercompany transactions are not possible. Or cross company code costing means one company code cost I can't transfer to other company code. Okay, when it is possible, this is possible when the company is following 1:n methodology. Then only intercompany postings are possible. Intercompany costing is possible. Intercompany transactions are possible. Is this clear? So any organization, if you are doing intercompany postings or intercompany transactions, right? Then what does it mean? That particular company is using their controlling area 1:n methodology. And that particular company is not having intercompany postings. Intercompany postings. Then what does it mean? They are following 1:1 methodology. The controlling area part. Any questions on this?
Naveen, here I have a question. When we talk about intercompany postings, right? So
Yes.
when my fiscal year difference is
Okay.
coming into picture, but I have intercompany transactions,
Yes.
then what should we do then?
So see, normally what happens, it's a reporting purpose, your physical year may be different. For example, as I said that your company code is in US and your company is in India, right? In a high level, we will generate a common reporting for Indian legal requirement purpose. But whatever company code I'm having in US, clear? Only for US legal reporting, we will for US company code, we will generate 2 structure reporting. So here it's coming into picture. There will be 3 types of currencies normally. I can tell you in ECC version, we have you can call it as in 2 types of companies. One is local currency. Another one is a group currency. Local currency and a group currency. What do you mean by local currency? In the sense, your company code currency is considered as your local currency. Company code currency is considered as a local currency. And one more currency we call it as a group currency. What do you mean by group currency? In the sense, in international market level, we need to generate some reports. We will do some imports and exports. So here we can't produce my reporting as per Indian GAAP reporting, Indian local reporting. I need to generate a report through IFRS reporting. So in IFRS reporting, we need to have some reports need to be converted through global currency. For example, if I take USD currency, so every transaction will be converted with the exchange rate values through to USD. Clear? In lower level, what we will do is we will generate according to your corporate company. For example, as I said that my Birla company is corporate company is in India. So, and I am having 3 company codes. One is Birla 1 Cements, Birla Steels, in both are in India, and Birla Steels one is in US. So here at the time of basic configuration, what I'll take is the currencies are different. As I said that controlling area currencies can be different, right? So Birla 1, Birla Cement in India, I'll take INR. Birla Steels in India, I'll take it as an INR. But Birla Steels US, I'll take currency as an USD. And next one, when it comes to physical year, Birla, my corporate office is in India, then all the three company codes in the basic configuration, I'll give my fiscal year as whatever corporate company follows the fiscal year that we are going to give. Corporate company in that, for example, April to March. So for all Indian company codes, I'll give it as an April to March. And for US company code also, we are going to define April to March. Clear? But when we make a difference in the sense, when we want to generate a legal reporting according to US requirement, for example, my company is in US, then at the time of new GL configuration, we are going to define one more fiscal year for US, that is nothing but Jan to December. So here US company code, we are going to define two different fiscal years. One is for Indian local reporting purpose and another one is for US reporting purpose. So in the basic configuration, we are going to take April to March only, because we need to, whatever member company codes are there for that corporate. So we need to create a local reporting as per Indian requirement. And after that, we are going to generate a group reporting as per US requirement. Is this clear?
Yeah, Naveen, got it. So just for a clarity, when I'm talking about chart of accounts and the reporting structure,
Okay.
If my company is in a corporate office in US, then my reporting structure would be on USD and as per the IFRS just design.
Yes.
And then my reporting period would be from January to December.
Correct.
And then when I'm filing for local as India company, we have April to March. Then whenever I file the return for Indian company, I will use my company local accounts and use that filing. But at corporate level, I only use the controlling area. What that is 1:2, and then
Yes.
Okay, got it.
So as per that local requirement, we will create a number of fiscal years for that.
Yeah, got it.
Okay. Any other questions from anyone? Any other questions? So here I said that as the 1:n methodology, how it looks like. See here, I have taken here 1:n methodology, 1:1. You can take it as a client 800. This is operating concern. Okay. So here, for example, I have 4 different company codes. For example, I said, okay, one is in Singapore or one is in Europe, Switzerland. This is my Switzerland company code. Fine. So here you can see here 1:n methodology. My Birla controlling area. Birla controlling a BCO. We can define later that. So company code 1, BI01, company code 2, BI02, company code 3, BU01. So here I'm connecting to 1:n methodology in the sense, what does it indicate? So here I'm using the same chart of accounts. Here I'm using the same chart of accounts. Here I'm using the same chart of accounts. And same time, I'm using the same fiscal year for all the 3 company codes. So that's the reason we are able to map 1:n methodology of controlling area. So I have one more company code, fourth company code. So here, this BS04, this chart of account it's following different chart of account. And same time, it is using a different fiscal year. So I can't connect with 1:n methodology controlling area. We need to have a separate controlling area for this particular company code. Clear? Any questions?
So Naveen, when we are creating a different controlling area for the 1:1 ratio, but consolidation we can do at one level, right?
We can do it.
Okay.
Yeah, that I'll show you again. Yeah. Any other questions? Any other questions?
No, Naveen.
Yeah. Next one, company codes. So what exactly company code in the sense? It is the smallest organizational element. It is smallest organizational element in FI module for legal reporting. For legal reporting. Based on this, so normally we will start in our life like normally company codes. Okay. Based on this, we can generate all financial reports for internal and external stakeholders. For internal and external stakeholders. Full stop. Company code may be a holding company or a subsidiary company, or branch company or affiliated company, or it may be a sister concern, Full stop. Every legal entity, we need to create every legal entity, we need to create a company code in SAP. In other words, it is the organizational unit. It is the organizational unit in the financial accounting. For which a complete set of books of accounts, are maintained for legal reporting. Full stop. The creation of a company code is mandatory. Clear? So what do you mean by company code here? It's a legal entity, a special recognition. It will have its own recognition, company code. And all the books of accounts are maintained at company code level, not at company level. Company code level, the transactions will be recorded in the books of accounts. Clear? That's the reason we have mentioned here, definition of or creation of company code is a mandatory. Without company code, without defining company code, or without creating a company code, we can't record any transaction in SAP. It's a mandatory step. Okay. Last but not least today, a company. Company means group of companies. Within the bracket, you can write as a corporate office. Company means group of companies. Within the bracket, corporate office. In SAP. Based on this, we can generate all consolidated reports, like country wise, product group wise, etc. In other words, company represents the group. Represents the group, full stop. The definition of a company, is optional. Is optional. Full stop. A company can have any number of company codes. Okay. So here, as I said, as we discussed, company means nothing but a group or corporate office. But here, for example, I'm having only one business, only one company code, nothing but I'm doing only transactions in one company. Clear? So here I am doing different businesses. Then defining of company is a mandatory. Clear? Different businesses. But I'm having only one business. I'm having only one business that I'm dealing in India, that too only steels, right? Birla Steels, that's it. No any other businesses. Then directly without creating company, we can create company code. All the books will be maintained in company code level and all the reports will be maintained at company code level, because we don't want any group reporting, because we have only one business. But if I am having number of businesses, as I mentioned, number of business, Birla Steels, Birla Cements, okay, in India, Birla Steels in US, I'm having a different company codes, right? And I want to have a consolidated reports of all the 3 company codes. Then to have this consolidation, we need to have we need to have a company. At only when we have a number of company codes, then only we will define a company. If we have only one business, then we won't define a company. Directly, we will start with company code. And all the reports will be generated under company code only. So that's the reason definition of a company or creation of a company is an optional. When we will define a company, when a company is having a number of company codes. And there is no limit. A company can have any number of company codes. More than one, then we will define a company. If we are having only one company code, then it's not required. If you want to wish, you can define, but it's not required. That is about your company. Definition of a company in SAP is an optional. Okay. Definition of a company code is a mandatory. All the set of books of accounting will be maintained at company code level, not at company level. Any questions on this? Any questions? Yes, no. Yeah.
No questions.
Yeah. Thank you. Once again, sorry, I'm happy Ugadi to one and all. We'll continue the session tomorrow with other respective things. So tomorrow we will complete the literature part and we are going to define our business, whatever Birla, whatever example we are going to take for the project. Is that fine?
Yes.
ma'am.
Yeah. Thanks a lot. Thank you. See you in tomorrow's session. Thank you all.
Thank you.
Thank you, sir. Hmm?